How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest and create passive income and generational wealth. I'm your host, Doron Nissim, and today I have the pleasure to have our guest, Vessi Kapoulian. Vessi, how are you doing?
I'm doing great. It's a pleasure to be here today, Doron.
So excited to have you here. Vessi has 18 years of business experience, including 14 years of commercial lending and 4 years of business management. She started her real estate journey in 2017 while doing her full-time W-2 job. And since then, she has acquired 6 properties, 161 doors. And that is amazing. Vessi, so tell us your background and how you got to do real estate.
Yes, happy to share that story. And for me, it actually started, one could argue the seed of real estate was planted many years ago behind the Iron Curtain when I lived in Bulgaria, because at the time there wasn't really a developed stock market. And when people discussed investments, they often referred to real estate, often their primary home, maybe a second one, maybe precious metals and such. So it wasn't until I arrived to the US for my undergraduate education that I discovered the stock market, but never really quite warmed up to it. And yet I followed the traditional path that many people do, which is go to school, get a corporate job, start climbing that corporate ladder. So the real estate seed didn't quite germinate until 2017 for me, when I bought my first investment property out of state. And it really started with the idea of building a retirement nest egg and diversifying away from the stock market. Along the way, there were a lot of clues. I just didn't pick them up on time. But seeing my fellow colleagues being laid off due to multiple restructures, living through the 08-09 crisis, which left a lot of people on the street with their retirement portfolios shattered. So I eventually started to take control in my own hands of what I can control, and that's how it got started. After a couple of years, I purchased another single-family residence, since the first one went well and it was a great experience, then another and another. And before I knew it, the light bulb went on, and I saw this as a bigger opportunity and something that can potentially replace eventually my full-time W-2 job income. So I asked myself, how do I scale this further? And multifamily emerged as the natural transition, where I could apply the experience I had gained on the residential side of asset managing my portfolio and apply my skills in underwriting and evaluating properties. My W-2 job is a commercial lender. So I went down the rabbit hole of researching various coaching and mentorship programs, since that's what a lot of successful people recommended one should do. I took action and got to work analyzing a ton of properties, and eventually that consistency paid off. I was able to close on my first multifamily property. The second one followed shortly after, and continuing to grow and scale from here.
Wow, very inspiring. It's amazing that you got into the United States, I guess, without nothing, and you started from nothing, and little by little, with the years, you started to acquire real estate. And you said that you bought your first property out of state. So can you tell us how was that experience? I mean, probably a lot of people are afraid from buying something that's so far from them. And so tell us about it.
It's a great point. And I will say I was scared as well, because I think you're always taught you need to buy within driving distance of where you live. But I reside in Los Angeles, California, which is a beautiful place. However, investing here, it's challenging for a couple of reasons. To make my investment objective was cash flow. And to achieve that, I would have to put a pretty sizable down payment amount to buy a property here at a lower LTV or loan to value in order for the numbers to make sense, or buy it all cash. So I didn't have that amount of liquidity. But secondly, it's a very regulated, not very business friendly state. So with those two obstacles in mind, that naturally pushed me to consider looking out of state. I will say how I chose the location was, so I invested in Memphis, Tennessee. That was the first place where I went, and it really started from a real estate meetup. I had been to Memphis previously, had some idea of the city, but ultimately decided to take action versus get bogged down in analysis paralysis. I was motivated to make that first purchase, and since the fundamentals didn't make sense for me where I lived, I decided to look elsewhere.
Wow. Yeah, and they say that comfort can restrict you. So because you had to go out of your comfort zone, out of California, out of Los Angeles, because the numbers really doesn't make sense over there as far as investment wise. Yeah, you had to find another place, which is great. I mean, I'm sure it just went on and grew more and more and more. So can you tell us, like, what was your aha moment in your journey in real estate when you said, this is what I want to do, and I love this, and I want to keep growing and growing?
I think for me, it was when I started to see that consistent cash flow that was building, and that I've been now able to scale by further growing into the multifamily space. But it's one thing that you cannot do alone, or maybe you can, but scaling and growing will be difficult. And especially in my case, investing out of state, probably the key item that I think was instrumental into my success was finding the right team members to partner with. Initially on the residential space, it was the property manager, real estate agent, basically the boots on the ground. And now that I've expanded into the multifamily space, it's the expanded management team, or my partners that effectively co-manage the various properties alongside with me.
Yeah. So are all the properties in the same location, or is it spread out in different states or different areas?
They're spread out in different states. So my multifamily portfolio is in Florida and Augusta, Georgia. So Tampa, Florida and Augusta, Georgia. And my residential portfolio is also in Florida as well as Tennessee.
Wow. That's awesome. Yeah, and those are great markets. It's just growing and growing, and it's very good. How do you pick your market, by the way?
It's a very important question, and I definitely did my diligence. Even with that first initial residential investment, I really focus on the fundamentals of population growth, job growth, income growth, and job diversity. And I would say quality income jobs as well, income growth as well. Those are the factors that I start with. And once you identify a city, then you can dig deeper. There are a few additional criteria that I look at when I evaluate different neighborhoods. But starting with those core four fundamentals helps me narrow down the options.
Right. Those are great things to look for. So was there like a great deal, the most successful deal that you can share with us that we can learn from you?
I'll speak about one of the deals in the commercial multifamily space that we closed, and why that is unique is because it's in Augusta, Georgia, not a market that I initially decided to focus on. I've been focused on Tampa, Orlando, and Jacksonville, so those three cities in Florida. But why it is special is because I was able to add value to that team. There was one particular GP who needed help with underwriting and that second set of eyes on the numbers. And eventually one conversation led to another. Before I knew it, I was talking to the remainder of the GP team and able to add value in other ways around lender diligence, the market presentation, and so forth. So eventually I was offered a position to join that team. Since we've closed on that property, it's performed phenomenal. Our projections were conservative to begin with, and I always recommend to people to start with a more conservative approach because there are always unknowns and market fluctuations that you cannot foresee or anticipate. But we have been performing ahead of projections. We're able to start distributions ahead of projections and have now switched from quarterly to monthly distributions. And that's very exciting for me because ultimately we're helping our passive investors build that additional income stream on the side and gain the tax efficiencies without having to actively manage the property and deal with the 4Ts, as some people call them, the tenants, termites, toilets, and trash. So that's been very rewarding. But of course, it's also very rewarding to see that hard work and efforts coming to fruition and our projections panning out.
Wow, wow. That's very exciting. And I want to talk about two things that you said. One thing that somebody reached out to you because of your underwriting skills and everything that you do, which is, it talks about networking. You need to have the right networking. You need to know the right people. And by that, you just expand your business, expand your portfolio. And the second thing that you talked about is so exciting that you were able to move from quarterly to monthly distribution, which is phenomenal. Usually you hear about changing from monthly to quarterly and yearly, but in your case, it was actually the other way, which is amazing for the investors. I'm sure they're also very excited about it.
Absolutely. And it all starts with the preliminary diligence, right, on the market and the property. And of course, the team. Everyone has complementary skill sets. So when you mention networking, at the end of the day, it really comes down to how can you add value to other people? How can you help other people? And so I've helped many with underwriting on a pro bono basis and just either that second set of eyes or jointly underwriting deals together. And eventually word got out that I have some skills in underwriting.
The underwriting expert, that's Vessi. That's amazing. So, I mean, to something else, which I don't know if you have one, but if you can share with us like a bad deal or something that you wish you didn't do, that people that also can learn from.
Absolutely. So there was one deal. I actually ended up not doing it because I pulled out of diligence, although I lost some of my diligence money there, and that was on the residential space. So that would be one example I can briefly discuss, as well as a painful experience on the commercial multifamily side. But what happened on the residential deal and why I ultimately pulled out, and it was a great lesson learned that now I've carried over into the multifamily space, and that's walk every unit. It was a small duplex in Florida, and oddly enough, we were not allowed in one of the units. And later, when we eventually saw that unit, it needed quite a bit of more work than what was represented to us. And the numbers didn't make at that point of time, didn't make sense at that point of time without a material adjustment from the seller, which they were reluctant to do. So I lost some diligence money on that, but it was a very valuable lesson learned to walk those units up front and be pretty firm in that criterion. And now we apply that to our multifamily properties. But as far as the multifamily, actually it happened for both deals that I referenced earlier during our call. We closed those shortly after, or we got under contract right when the Feds had started raising rates. And I'll never forget, I kept checking with our lender very frequently, and as recent as a Friday night, everything was going fine, no change in terms. On Monday morning, I received an email, not even a phone call, saying, sorry, we're putting our lending products on freeze, good luck. And that was devastating because we were already under contract, had other people depending on us, the seller, broker, my partners. Eventually, what do you do in these moments? You lick your wounds, you get up and you come up with a solution to move forward or decide if you want to move forward. In that case, we had a couple other lenders we had spoken with previously. So I made a few phone calls and shared the tough news with the broker, which was another very difficult conversation to have. But I didn't just break the news to them and run away. inform them of who we've already reached out to, how many other lenders, and what the plan is so we can move forward. And eventually we did, but that was not something I saw coming. And at a minimum, I thought there would be some sort of advance notice or communication, or at least a phone call, not a cold email.
Yeah.
But
Unfortunately, sometimes when you deal with banks or big banks or lenders, they see you as a number and they don't really care about what care about you basically. They care about the deal more or if it works for them and not for you. So unfortunately, we have to deal with these kind of things. So, I mean, in today's market, everybody's talking about recessions, banks, things like that. And like you said, you had two deals that didn't go through. What do you do to mitigate those kind of risks right now? Well, how can you protect yourself and your investors?
Mhm. It really starts with the upfront diligence, first on the market and then the underwriting. You cannot expect anything and everything that will happen, and unexpected things do always happen,
Right.
as we've learned. So being conservative in your underwriting, and that can mean a lot of different things to different people, but aligning, for example, your rent growth and vacancy assumptions to the current market conditions, making sure you have ample reserves. We usually like to put at least 6 months of operating and debt service, which I know sounds too much for some people, but it has helped us carry it through some of the unexpected circumstances. And being realistic as well in your cap rate assumptions, entry and exit, because those inevitably impact the valuations. Making sure the deal works without a refi, not counting on it. And again, overall building in that cushion up front. So when unexpected circumstances happen, you can absorb that hit, because in reality, right, up until March of last year, right, the Fed was talking about inflation being transitory and not really discussing rapid and enormous rate hikes of the magnitude we've seen. Nobody could have foreseen Hurricane Ian either, and now insurance, right, is killing a lot of deals, not even interest rates. So nothing that you could have really forecasted, but building in that cushion up front, I would say, is key. And then getting creative when those unfortunate circumstances hit, to see, okay, where can we give and take to make the numbers work without necessarily adversely impacting investors.
Right. And a lot of the points that you came up with they come from experience, basically. If you have experience in the market, you experience things that went through when market went down, up, things like that. You know how to mitigate risk and, to plan accordingly. If something happened, you already have the plan. Plan A, plan B, plan C, just to make sure that nothing is going to happen to your investors or to money that they invested, which is very important. And people, they're investing their life savings, so they need to know that they can trust you with their money. Yeah.
Absolutely, yes. Every experience it's a lesson learned, and you weave it into the next deal and the next deal. You're constantly learning and constantly growing. It's the journey is by no means perfect, and it's not easy. But if you are motivated, have a strong why that's pushing you and helping you show up every day, good or bad, then that's the best you can do. Learn
Right.
and build from there.
Yeah, learn and move forward. Always keep moving forward.
Yes.
All right, so we're going to move to the far round of 4 success questions that are going to help our viewers to be more successful. So the first one is, what is your 3 best success habits that you do on a daily basis in your business, in your personal life?
Absolutely. And what guides me, and really what inspired even the name of my company, Dream, Believe, Achieve, really boils down to these core principles. Dream is knowing your goals, having clarity of goals. Believe is believing in yourself despite the challenges and surrounding yourself with like-minded individuals. And achieve is it's taking action, because you can pontificate all day long, but achieving those goals and making those dreams a reality is not going to happen unless you take action. even if it's a small step forward, even if you're faced with something big and complicated, think about what is that first step that I need to get there, and then make the second and the third. And before you know it, you'll be well on your way of making those dreams a reality and those goals real.
Wow, I love it. And you have it on your wall all day long so you can look at it and make
Yes.
sure you follow through. I love that thing. So the next question is, what is a good resource that you use in your business that you can share with us?
There are a ton, but I personally really like the Calendly app. It helps me stay organized, but also provides access to others, so we can make scheduling easier and avoid hundreds of emails, texts, phone calls. It just makes things a lot easier. So that's just one application that's been very helpful for me.
Yeah, Calendly for sure. It's a great app. So, all right. So the next question is, what are your three tips for making money in today's market?
We discussed one of them, which is be conservative. The other one is be creative. The lending market has tightened, but it doesn't mean that there's no other way of getting deals done. And be persistent. Don't give up. It's only a matter of time, only a matter of reps and taking action. So don't give up. Real estate goes through cycles. We're going through one, and we'll be going through one as we speak. But I do believe in the long-term benefits. So don't give up. To keep going.
Right, right. I'm a firm believer of be consistent. I mean, people always zigzag. They go from here to there. They try different things, and they never follow through or stay in the lane, and or move forward with what they need to do. And being consistent is just doing and doing. And if you need to change, you change, but you keep doing what you
Right.
want to do, and eventually you figure it out. Eventually
Right.
you get to what you want to do. If it even if it's completely you change your way from the beginning until you got it, but it's just yeah, it's being consistent, definitely. All right, so for the next question and the last question that I have for you for today is, for people that have a full-time job, they love real estate, but they have full-time, they don't have time to invest or check real estate or check find real estate. What is your advice for them? How can they invest in real estate today?
So I think the first and foremost, they would need to decide if they want to be active or passive, because there are different ways to get engaged with real estate. If you choose to be active, I would say being organized is key, and that's the path that I chose, and time blocking and setting those 3 daily goals. I have the must-do goal, the needle mover, as some people call it, and the two nice to have, but always moving forward and making sure you get those objectives or tasks for the days accomplished. For those that are interested in investing passively, you can do everything I just described without necessarily having to do all the work and heavy lifting. In that case, your primary focus will be making sure you do proper diligence on the sponsor or sponsors you choose to invest with, and getting educated about real estate. I did write a book, The Busy Professional's Quick Guide to Investing in Multifamily. So if people are
That's
interested
awesome.
to get a copy of that, I can share, and that would be a good educational resource for those looking to get started. Actually tailored to passive investors, but can be a good resource for those considering active investing as well.
Yeah, definitely, for sure. I know our viewers will want a copy of your book and learn how they can invest passively and actively, but most to be successful and be more successful in their business. Yeah.
Absolutely.
So now, people, if they want to reach out to you, they want to connect with you, how can they find you?
The easiest way to connect with me is through my website, dbacapitalgroup.com. D as in dream, B as in believe, A as in achieve. My phone number and email are there, as well as a link to my Calendly, direct calendar link, in case they would like to schedule a call. And it has a ton of free educational resources, really designed to make you a more empowered and better educated investor.
Wow, that's awesome. Thank you so much. You're so much content, so much help for people, and I love that.
Oh, thank you. It's
Thank
a
you.
pleasure to be here and happy to share a few golden nuggets with the audience today.
Definitely. I'm sure everybody will love to hear you. Thank you so much.
Thank you, Doron.
Thank you.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.